Okay, welcome back to the deep dive. Today, we're digging into something pretty big that's been all over the news. Bitcoin's massive price surge.
Yeah, it's been quite the ride.
Absolutely. We're working from some great material here, excerpts from a CNBC television video transcript. It's titled, Bitcoin Trades Above $120,000, Hitting Record Highs Ahead of U.S. Lawmakers Crypto Week.
Right.
So our goal today is really to unpack what the report calls this rare mix of forces pushing Bitcoin up. We'll look at the market stuff, but also what's happening, with regulations.
And just to set the stage, the source material points out Bitcoin smashed past $123,000 for the first time ever.
$123,000.
Wow. And that puts it squarely in what we call price discovery mode.
Price discovery. Can you break that down a bit? What does that actually mean for the market?
Sure. It basically means we're in uncharted territory. There's no past price history up here to act as resistance. So the price is being set purely by current buying and selling, supply and demand right now.
Okay, interesting. So the CNBC report says something I found quite telling.
Yeah.
This isn't just a retail-driven rally. That suggests something, well, bigger, right?
Exactly.
But are we maybe jumping the gun, calling it sustained institutional interest? These markets move so fast. What feels different this time around with the big players?
That's a fair point. The key difference seems to be the scale and the mechanism of the investment. We're talking about serious money coming in through regulated channels.
Like ETFs?
Precisely. The spot Bitcoin ETFs, the ones holding actual Bitcoin, are seeing huge inflows. The source notes $2.7 billion just last week alone.
$2.7 billion.
Yeah.
In 1 week.
Yep. And almost half of that, it says, came in on a single day. That made it the second biggest session ever recorded for these ETFs.
Okay.
That signals real institutional commitment, not just casual interest.
That kind of inflow definitely gets your attention.
Yeah.
But does that much institutional cash coming in so fast, does it maybe bring new risks like more centralized control or different kinds of market vulnerabilities than we saw with retail?
It definitely changes the landscape. And those are valid questions the market's grappling with. Risk profiles do change.
Can you give a specific example of this institutional weight?
Sure. The source highlights BlackRock's private fund. It's now managing over $83 billion in assets.
$83 billion.
Yeah. And it's cited as one of the fastest growing ETFs in U.S. history, period. That kind of scale isn't driven by, small retail trades. It's large institutions making significant allocations.
Okay, so massive institutional buys are one piece. But the source mentions other market forces like specific trading behaviors. How are those adding fuel to the fire? It almost sounds like a feedback loop.
That's a good way to think about it, yeah. Market mechanics are definitely playing a role. We're seeing what the report calls a clear short squeeze.
Right, the short squeeze. Explain that quickly.
So you have traders who bet against Bitcoin, expecting the price to fall maybe near its old highs. But as the price blasted past those levels, they're forced to buy Bitcoin back to limit their losses.
And that buying pushes the price up even more.
Exactly. It adds buying pressure. And another factor mentioned is that a lot of options contracts just expired.
Options expiring. How does that impact things?
Well, many of those options might have been bets on lower prices or acted as hedges that involve selling pressure. When they expire and are cleared out, that potential selling pressure just vanishes. It kind of clears the deck, opens the door for more volatility, often upwards in this kind of environment.
Right, like removing a barrier.
Yeah.
Okay, so we've got the institutional money, the market mechanics like squeezes and options. But the source also stresses this political angle, a lift from Washington.
Yeah, that's the other significant element right now.
What's actually happening there? Is it real legislative movement or just, political noise? What are these crypto bulls supposedly encouraged by?
Well, according to the report, it looks pretty concrete. The House is apparently taking up several key crypto-related bills this week.
What kind of bills?
Things like stablecoin oversight, which is a huge topic, and another one related to blocking a potential Fed-issued digital dollar.
Interesting.
And the report mentions that Republicans are specifically calling this Crypto Week. They're signaling a push to make the U.S. sort of more welcoming for digital assets.
Now,
Obviously, we're just relaying what the source material reports here, not taking any
but
sides.
this is just reporting the context.
Yeah.
So let's try and tie this all together. We have huge ETF inflows. We have these market dynamics like short squeezes, and now this potential regulatory tailwind from D.C. What's the synthesis here? Is this a fundamental shift?
When you put it all together, it paints a picture of a really powerful setup. You've got near record institutional money flowing in via ETFs, providing this like base level of demand.
Right.
Then you have the market mechanics, like the short squeeze, acting as an accelerant.
Okay.
And now, layered on top, you have this potential shift in the political and regulatory environment coming from Capitol Hill. It suggests maybe a move towards greater acceptance and integration.
So it's not just one thing.
No, it's the convergence. The source suggests this mix traditional finance through ETFs, market technicals, and policy moves is really driving this moment and possibly legitimizing Bitcoin more broadly. It feels like a move beyond just speculation towards something maybe more foundational.
Okay, so let's bring this home for you, our listener. What we've unpacked here is, well, first, that huge institutional investment, especially through those spot Bitcoin ETFs, it's creating this really strong, sustained demand. It's not just retail this time.
Right, a different class of buyer.
Then there are the market mechanics, things like short squeezes forcing traders to buy and options expiring that remove selling pressure, both adding upward momentum.
Amplifying the move.
And finally, there's this significant activity in Washington. Legislation being discussed, a push to make the U.S. potentially more crypto-friendly, adding this political tailwind. It's this combination, this interplay of finance, market dynamics, and policy that's creating this really unprecedented situation for Bitcoin.
Yeah, and it really leaves you with a big question to think about. As we see these traditional financial tools like ETFs merge more and more with crypto, alongside these market technicals and this evolving regulation, how is that going to shape the whole digital asset landscape going forward?
Mm.
And maybe more fundamentally, what does it tell us about finding that right balance? You know, the balance between encouraging innovation in this space and making sure there's enough oversight to keep things stable and safe.
That's a great thought to leave things on, finding that balance. Well, thank you for joining us on this deep dive into Bitcoin's wild ride. Definitely keep an eye on how technology, finance, and policy keep intersecting. It's usually where the most interesting developments happen.